Welcome to TheoTrade. This is Don Kaufman. July 26, 2023. We are minutes after the cash close here on this Wednesday afternoon. Meta just came out with earnings, huge bid onto the marketplace, and then has proceeded to sell off. Tell you what, though, the S&P futures at this point, massively unchanged. Let's not forget the fact that it was a Fed day, rather low volume. I mean, it just is a marketplace that cannot move. It's a market of BarbieSwift and summer drift. I'll explain that and much more here on this evening's update. Again, Meta just out just moments ago, and as you can see, there's this just a wild bid under the marketplace in the first minute, slipped back a little bit. You know, the interesting thing about Meta, this one, it had a significant expected move. The expected move on Meta, which for those of you that do not necessarily speak trader geek, expected move on Meta is what the option market ultimately depicted price action to be, right? So you're looking at, let's just call it what it is, about $26 of expected move on basically a $300 product. And what is interesting about it is it moved pretty much every ounce of that. I mean, the stock legitimately closed at like 299. And if you look at the bid under the marketplace, hits 325 on the button, reverses off of it. So for those of you that don't necessarily look at expected move, well, you better get in the know because that expected move was just on the button. Just keep in mind, expected move is not about directional bias. No, it is about, price action. It's the option markets trying to handicap forward risk. Really critical, though, to kind of understand that in a marketplace, especially in and around earnings. With that, skip right to it. The Fed. Let's talk a bit about the Fed in what, as I said a moment ago, it's some summer drift in terms of trade. And the reason I call this summer drift, we're going to go to the S&P futures here, which is, this is the product that, for the most part, drives markets. SPX options, the hedging product, of course, is the SPOOs, which is the E-minis here. And one of the things that I will point out as you look at markets, and the reason I'm talking about summer drift, the market's actually open for portions of this day where we're not even substantiating 1,000 S&P contracts in a minute. And what's crazy about this, and I'm going to zoom in for just a second, the Fed announcement comes out at 2 p.m. Eastern, and you can see the contract size, it's nothing. By the way, the Fed, what did they do? Exactly what they were expected to do. They raised by 25 basis points, yada, yada, yada. Jerome Powell came out, hit the main stage, said absolutely nothing. One of the questions, though, posed to Jerome Powell had to do with literally the Taylor Swift concerts, and you can't make this up, and people going out to the Barbie movie. That was obviously a sign of a strong economy. I must have missed that one. I missed both of those, in fact. But that's why I call this a market of BarbieSwift and summer drift. So even after the Fed raised by 25 basis points, there was like no volume whatsoever. The volume started to pick up in the S&Ps when Powell was speaking, and then just kind of, dropped off again on the trading session. Anyway, it's just kind of ironic. We're stuck right here, with a market that's 4,600 unchanged. There's not too many Fed days that come out where you're going to see the S&Ps massively unchanged. The other really interesting thing on this particular front is Microsoft. Microsoft really did not impede, upon the broader market at all. Obviously, look, you can say what you want about NASDAQ. It's down 29 points. 29 points in the NASDAQ is basically unchanged. So Microsoft got hammered to the tune of almost 4%. Didn't matter. Why? Google cannot offset all the losses of Microsoft. Obviously, Microsoft is considerably larger in terms of market capitalization, but Google gets a nice bid to the upside. By the way, $7 is exactly what it was expected to move, but Google plus a little action from Meta. Now, this is pre-earnings, and pre-earnings, Meta was actually up some, 1.4%, but Google plus Meta was enough to stave off any real sell-side activity inside of the Nasdaq. Meanwhile, Meta again came out after the bell. Okay, the stock is up listlessly at this point. So again, a move of about $11, $12 to the upside, but it's still very, very early. Zuckerberg has to come out and mention AI 50 times in the conference call, and we'll see what transpires. And it's not just about the conference call. It's about how order flow is going to play out tomorrow. The conference call obviously has a lot to do that, but again, it's how order flow plays out following that conference call. Lately, the conference calls have meant a tremendous amount. Guidance and forward guidance have meant a tremendous amount. All right. So as I'm saying, this, and again, there's a lot of summer drift. What summer drift really means to me, I'll come back to the S&Ps for a second. The S&P futures, okay, even again after the close here, we're lucky to substantiate about 1.3 million contracts. Now, this is something I've been talking about a lot lately. That's why I kind of call it summer drift. That's with a Fed announcement. Some decent earnings last night, some decent earnings tonight. We can't get out of our own way right now. So we really are in some summer drift. And it's one of the reasons, of course, you'll see volatility. It's not going to move. Okay, and volatility won't move until it does and moves considerably. So any one of these earnings announcements could be the catalyst to ultimately, move. Moreover, as the week kind of progresses, we are going to get some data out there, which includes, of course, the PCE indicator, which it's big, right? So it's again, personal income, it's PCE indicator. Be out on Friday. Obviously, some jobless claims tomorrow. Also, an ECB announcement tomorrow. The reality again, anything in what is ultimately a dull and drifting marketplace can be a fuse, a catalyst, if you will, for bigger moves. My concern, just to the remainder of this week, has everything to do with the fact that, well, let's actually go into it right now. We haven't really done anything this week, okay? And there's a whole lot of expected move, okay, left in this marketplace. What that basically entails, okay, and I want to be very, very clear about this. The marketplace this week started in and around, we'll call it 45, like 36, okay? We're bid right now to 45.66. So in effect, we're about just about halfway home to the upper edge of an expected move. So again, here we are talking about expected move again, right? And the expected move this week is plus or minus approximately $61. All right, that's your expected move. So we're again about halfway home to the upside, which leaves a lot of room for improvement. All right, this can be again a wild bid, the upper edge of the expected move over here. This is SPX into the 4,600 or come off quite substantially. And again, there's a lot of room still for movement. Now, just because I sit here and say, well, we got to go here, we don't have to go there. But if you look back, and one of the things I want to make absolutely crystal clear is that if you look back, okay, at almost every recent trading week, probability basically states we do hit the upper end or lower edge of an expected move. Okay, and you can go back in a lot of different weeks, and here's a week that it did not hit the upper or lower edge of the expected move. Okay, but that's more of an anomaly. It's a much lower probability that almost every single week, even in the midst of some doldrums that we had here, there's a few that do not hit expected move. Generally speaking, though, you do hit expected move on a given week, and quite recently, we've seen breach at the end of the week after breach after breach after breach of expected move. So lo and behold, even though we're talking about summer doldrums, and this is like the first week that I really kind of feel, if you will, that summer drift. Everybody's on vacation before the kids go back to school, okay? You got to keep your head in the game at this point. because some of the lower volume, some of the lower liquidity can lend itself, okay, to much more dramatic moves. The liquidity is not there. There's nothing to support the marketplace. That can be in either direction. So you got to be a little bit cautious, especially those of you that are trading on an intraday basis. Look, volatility right now feels dead, okay? Even the bonds did not substantiate a move off of the Fed raising rates. Okay, so nothing is moving right now. You kind of feel like there's a little bit of pent up aggression. Of course, this is where everybody convinces themselves it's going to be a few weeks. The markets are going to wait. Look, we're going to be coming into August, September, which are historically speaking, okay, the volatile months in markets. So heads up right now, low liquidity, lower volume out there can equal very substantial moves in short periods of time. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.